What's up guys, welcome back to the channel. My name is Warren. I am a property investor in the UK and a banker here in London. My goal is to live free and independently from property. So I'm looking for an income of £3,000 per month from property. If that's what you want to, like, subscribe. That is what my channel is all about. So guys, 2023 in the UK housing market is fixing up to be the worst, most anemic.
And now it's confirmed, it's anemic growth.
Homeowner time bomb.
A recession is in the pipeline for the UK economy.
The UK is still an inflation nation.
Flattest year in UK housing, in UK property, in 15 years since the 2008 economic crash. It's looking like our UK economy is about to go on to life support. And just like a virus, that economic trouble is looking to contaminate the UK housing market also.
We were heading for a mortgage ticking time bomb. That time bomb has now exploded.
The average mortgage payment is going to go up. That's an increase on average of £2,400 a year.
But is there a redemption story amongst all of this?
In fact, house prices relatively stable in June.
Is there actually hope for us in the UK housing market?
Many young people, they will feel that this fall in house prices, which we're already seeing, could be a good thing. It may help them getting on the housing ladder.
Guys, stick around to the end. I think you're going to be surprised. So this is a June 2023 UK housing market update. Guys, I'm not going to waste any time. Let's go straight into the numbers, starting with the nationwide UK housing market index update for June. So we can see, guys, that growth is actually beginning to smooth out. Growth in the UK housing market in June was 0.1% compared to minus 0.1% last month. And when we take a look at the graph here, starting at January, so we can see that from January down to basically March, it was on a downward trajectory. We were kind of tanking, to be honest with you guys. And by the way, we know that the nationwide index is for mortgage approvals, approved mortgages, skewed towards first-time buyers because nationwide are heavy in the first-time buying market. But as I was saying, from January down to March, successive declines in the UK housing market. And then from March to April, a slight rise, slight drop off from April to May. And then in June, it's looking like we are beginning to smooth out. So still overall negative for the year. But next month and the month after that will be very interesting to see if the UK housing market begins to smooth out and starts to creep up in the latter half of the year. Year on year, between June this year to June 2021, the UK housing market is 3.5% down on last year. It has shrunk. And we know this, guys. I've made plenty of videos, guys, talking about what happened back half of last year with the budget, the inflation issues, rising the cost of living, and the rise in mortgage rates and the rise in interest rates, which has led to this point today. But let's look at some of the commentary in this nationwide UK housing market index update for June. The news is surprisingly semi-optimistic. Labour market conditions are expected to remain relatively robust, with unemployment still low, below 5%, with the Bank of England base rate likely to peak in the quarters ahead. So let me just pause there. So we have seen 12 successive increases in the base rate by the Bank of England, right? And what they're trying to do, guys, is trying to get a hold on inflation. They're trying to get a grip of it and see that inflation rate start to decline. And that's why we've had successive increases. What they're saying here is that they can't keep raising the base rate forever because it's going to get to a stage where people are just unable to afford it and afford just daily living expenses. So sensibly, as most people would agree, even the experts, it's likely to peak soon and we'll start to see it going down. And as a result, a combination of healthy rates of income growth, well, that's optimistic, and price declines, again, that's optimistic, should improve affordability over time, especially if mortgage rates moderate. On the flip side, to present a balanced opinion, it also says as it relates to the UK housing market and the base rate increases, the sharp increase in borrowing costs is likely to exert a significant drag on the housing market activity in the near term. So the first half of that was hypothetical. You know, if base rate rises do come under control, if real wages magically start to increase and the cost of living moderates, you could see an overall improvement in the UK housing market and the economy. But, you know, you have to cover both sides of the argument. The sharp increases is what has happened. There has been 12 successive increases in the base rate. So that's gonna exert, and it is exerting, a significant downward drag on the housing market activity, according to Nationwide, because affordability of mortgages, those rises in base rates are making mortgage interest rates higher, and it's putting more people off buying houses or entering into house purchases in the UK right now. And it ends by saying, you know, a 10% deposit on a typical first-time buyer home is equal to 55% of gross annual income. I mean, that is scary. And let's have a look at what Rightmove is saying, guys. So Rightmove is more an indication of demand. It's talking about asking prices for over 1 million properties in the UK. So this month has been a 0%, so very similar to nationwide, 0% growth. It's remained flat. It was plus 1.8%, 2% last month. That is surprising. When we look at the growth rate for the year in general, not as bad as nationwide, but fairly flat from January to February. Slight increase February to March, flat to April, slight increase in May, and flat from May to June. So again, very modest year overall, guys. And we look at some commentary. It says, despite some significant increases in mortgage interest rates over the last few weeks, or more like last 6 to 12 months to be honest, Rightmove statistics currently show no effect on buyer demand. Interesting. But a slight impact on sales activity. Buyer demand over the last 2 weeks is 6% higher than the same period in 2019's more normal market. Interesting. However, just as rates appear to be settling, the significant changes in the mortgage market over the last few weeks, so they're talking about the interest rate rises and uncertainty amongst movers trying to calculate how much they can afford. In the last few weeks, the average mortgage rate for a 5-year fixed, 85% LTV, has jumped from 4.56% to 5.2%. This means that a new purchaser can expect to pay £117 extra per month. So guys, we'll discuss this in a bit more detail in a second, but the real issue, right, is inflation. It's inflation and the corresponding rise in the Bank of England interest rates, base rates, to address that. That's having a spillover effect onto the housing market. The housing market in and of itself, guys, isn't inherently struggling. The housing market is being affected by what's happening in the wider economy. This is more of an economic issue rather than an inherent housing market issue. And even though it's kind of unprecedented, we know why the base rate, the interest rate, has been risen by the Bank of England 12 times in a row. This is intentional, guys. It's an intentional policy.
Well, what's the Bank of England been doing about that? It's been raising interest rates 12 times in a row.
This isn't accidental. I mean, this is why the Bank of England has put up interest rates. It does that in order to squeeze people's disposable income so that money is taken out of the economy to try and bring inflation down.
When the government, the Bank of England, take these policies, they're well aware that the price of mortgages and that the cost of living for the population of the UK is going to go up.
And of course, that has a big implication for your mortgage rate.
And it's going to be difficult for us. They know that. I hope you realize this, guys. But of course, they're not doing it because they're sadists. It is a tried and tested policy done by governments around the world, globally, right, to bring down inflation when inflation seems to be running out of control. They essentially want us, citizens, me, you, to spend less money.
The pressure is rising on household finances.
That's what this policy is intending for people to do. It's intending to try and get people to spend less money.
Have less money in the economy so that inflation gets under control. So guys, in saying all of that, right, we're in an economy, we're in a environment in the UK economy, in the UK housing market, where the economy is raging out of control as it relates to inflation, and that's why interest rates are being put up. That has a knock-on effect on mortgages, right? So if you are a homeowner, you're paying a mortgage that's gone up, right? And you're also struggling to just afford to live, to afford your groceries, your utilities, to put, petrol in your car, right? What do you do in those circumstances? Well, unfortunately, guys, there's not a lot you can do. We are not government ministers. We're not Bank of England committee members. The solution, as pessimistic as it sounds, guys, is to grin and bear it, basically, to budget, right? And this is where, the benefits of having a practice and a habit of budgeting really helps. As a family, as a household, we are shopping at much cheaper places. We have changed our spending patterns pretty considerably as it relates to the cost of living. We're using our car less, we're shopping in Aldi, we're shopping in Lidl, we're going out less. All of those things that you basically have to do in an economic environment like this. The good news is, guys, is that this won't last forever, right? A inflationary period doesn't last forever unless you're in somewhere like Zimbabwe, okay, or Venezuela or Argentina. I believe that we are peaking, or we're very close to the peak of inflation, and we're very close to the peak of Bank of England interest rates, if not already. Those rates are going to go down eventually, guys, and I think sooner rather than later. And if you're a mortgage payer, I think that's the point at which you're probably going to want to look at fixing your mortgage interest rates if you haven't already, right? Me personally, I'm on a floating rate because I'm actually waiting till rates go down and then I'll fix when they're at a lower level. But I know that not everybody can afford to do that. But I'd be very interested to know, guys, what you guys are doing in your personal lives. You might not be a mortgage payer right now, but if you are, let me know what you're doing. But if you're just living, all of us are living, right, day to day, where you've all got expenses, okay? What are you doing to get through this period? What have you been doing over the last 6 to 12 months? Let me know in the comments. Guys, thank you as always for your support of this channel, guys. I really appreciate you all. Keep subscribing, keep liking, share this video, share this page with other people who you think might benefit from it. I'll see you guys in the next one.